Welcome to Momentum Monday, Momentum Sunday on July 7th. Howard,
I'm in New York. I got some new glasses. What do you think?
they're looking okay. I mean, you're looking kind of like the son of Elton John. So,
Listen, he was a talented guy.
yes, absolutely. I agree with that.
All right. It is Sunday, July. Happy 4th. Did you have a good 4th?
I had a good 4th. What about you? I had a 7 a.m. workout, and then I went on a hike, and then I watched fireworks in downtown.
Downtown, were they good?
Yeah, I like them.
How's the weather been?
The weather's amazing. Not too hot. In the low 70s, the occasional clouds. We've had a couple earthquakes. I mean, not we.
Oh yeah. My son called me. He felt an earthquake. What was it?
I didn't feel anything. Both of the times I was in the car.
Did your fantastic artwork fall off the wall?
No, nothing fell. I didn't feel anything.
Is that bullish? Are earthquakes bullish or bearish for the market?
It depends on the sector.
So what was the damage? What are you hearing the damage was?
Well, I'm sure in San Bernardino there was some.
I'm filing a claim. Have you filed a claim yet?
Nothing happened in San Diego. San Diego is fine.
I'm reporting massive damages to my liquor collection.
Yeah, it's probably max.
Okay. Let's get right to the market.
Let me share my screen. Just 1 second. I just need to make sure people can only see my screen. Okay. So this is the chart of the S&P 500. Last week, we kind of have a half a week because the market was closed on Thursday, and then there was a half a day on Wednesday. But despite of everything, consolidating near all-time highs, we had that gap on Monday on the so-called China-US.
There's no news.
There was no news.
Get this straight. There is no news. The market goes up. It has nothing to do with China. There's all kinds of headline risks to the downside, but until there's an actual deal, this is all rumors. There's no deal.
Yeah, I mean, it seems the market just wants to go higher, so we continue to see.
If it goes higher, it has nothing to do with China until we absolutely have confirmed. Nothing comes out of that mouth believable. And that's why on Friday we got kind of like, we didn't get the follow through. But it was a good close. It was a pretty good close on it opened up weak. And it was a good close.
Okay. Yeah, this is a typical bull market action when the market opens red and then finishes strong in the green. This is typical bull market price action.
Yep.
And large caps continue to lead. Small caps are maybe we'll see a catch up.
I don't like playing catch up. And we'll go through this later. I have way too many positions. I'm at maxed out positions. I don't know about you, but I'm maxed out. So I'm not looking to play catch up. I'm sticking with my winners. If you're looking to play catch up, this is how you get hurt. The market has kept you in this market. There has been no reason to be out of this market. So people playing catch up here are at risk. The S&P was up, 20% now this year, Ivan?
Yeah, close to it.
Yeah. So if you are a hedge fund and you've been trailing forever, but if you are trailing averages, you've got to work this summer. There's going to be a lot of lighter volume and whipsawing, so it should be a good stock pickers market. But playing laggards here is going to be very risky. But there's going to be a lot of people trying it because they're behind the indexes. So be on alert. I think there's all the headline risk is to the downside. The price action confirms that we should go higher. So it's a headline risk market. You're going to have to live with that. We've been talking about that, I don't know, for 2 years now. It's all headline risk. And there should be warnings if we roll over. But S&P looks strong. The NASDAQ looks strong.
Yeah, and even financials are.
I think the financials are the key differentiator again right now. And as much as I don't like them because I don't want to play catch up, they're not hurting us anymore, right? Goldman's back above the 200-day moving average we talked about last week and holding. So there's a change of trend going on here. I'd love to see it, much stronger. I don't think they are going to be the leader, but they're not hurting anymore. And that's what you like to see. You don't want to see JP Morgan and Goldman hurting us. So risk is on. So let's go through some ideas that you have, Ivan.
So basically, we continue to see, currently we see two major trends in the market. One is the dips in software momentum stocks continue to get bought, even when it seems like they're forming bear flags. Those bear flags fail and they just reverse higher. So many of the software momentum stocks are currently looking constructively and ready to go higher. I mean, and also the other major trend currently that we see is sector rotations. We continue to see sector rotations. In a bull market, we don't see all sectors go up at the same time. We can easily see one sector go up 3-4% in a week while another goes down 3-4%. For example, on Friday, we kind of saw weakness in biotech, while the rest of the market closed pretty strong. So these are the two things: buying the dips in strong momentum stocks and sector rotations. And let's take a look at some of the Momentum 50 stocks. This week we didn't have any changes on the list in general, which is rare. And we still see quite a few good setups. For example, this one is setting up.
Well, biotech's a big sector, so there is some winners, and we'll go through those. But EPAM Systems, that looks good. Yep, keep going.
Yeah, it is setting up. Zendesk is soaring near all-time highs. This one, for example,
that's the 20s. What's Woodward?
Completely different sector, but it's looking good. Technical speaking.
Housing looks, semiconductors are constructive.
We saw a slight pullback in semiconductors, but yes.
But constructive, again, I don't care to own them, but banks and semiconductors tell me that, and even the biotechs and housing tell me that, listen, we could get shaken. We can roll over at any moment. But that's not the way we try and think. We're trying to follow price, and you generally get paid when you're long a tape like this. But don't chase weak stocks. Don't play catch up. Find great setups. You got to do your work. But chasing here is not what you want to do. You don't want to panic to get long. You want to find high growth companies that may be being overlooked from good bases breaking out. AMD's just been going sideways, digesting a massive 2-year gain into 2018.
Yeah, the strongest semiconductor currently, I think, setting up.
Yeah, AMD's setting up. A lot of the semis are setting up, but again, not for me. I'm looking for pure growth. Let's go to our Market Wisdom Momentum 50 and go through a few names. Top of the list, you got Smartsheet. We've been talking about that. It stays at the top of the list. Lulu, Disney. I'm super. Yeah. Again, I'm full up with software stocks. I think Disney looks super interesting here.
Disney, absolutely.
As Netflix continues to lose shows, money's going to continue. Disney's digesting it. Again, I have to say Netflix. I'm not long. One of the only stocks I'm not long in my 8 to 80 list, and it's digested a massive run, since 2014. And basically, there was a shakeout last year, but it is now basically a year and a half sideways.
Absolutely. It seems like it might test 400 in a good market.
400, it may break out and go to 600 for all we know. But on the restaurant side, you've got McDonald's and Chipotle's.
Yes, we have. The restaurants are also looking good. We have CMG, beautiful base.
Beautiful base. I don't love it. I'm sticking with McDonald's. I think Chipotle is a pure growth, but I think McDonald's continues to be a misunderstood tech stories and could start looking like Domino's. Uber, like I said, Uber all over New York, I see coupons for Seamless, Uber Eats, Postmates, Grubhub. Everybody's giving away delivery, and McDonald's. Really, all these free delivery companies turn McDonald's into Domino's. And if we look at Domino's chart when they were running away with it over the last 3-4 years, this is go back to see the monthly. Let's go back and look at a monthly. So if you go back to 2012 when it broke out, and you look at that 10-bagger gain, that was because they were their own delivery. They were a mobile tech company, right? They had an app, they had everything. I think what McDonald's has, and again, I don't think you're going to see a 10-bagger run for McDonald's, but what McDonald's has, and I think you're starting to see this from 2017, and it's kind of doubled from then, is they're benefiting from Uber Eats, without having to pay the drivers, etc. When a kid opens up all these apps, it's maybe not in Manhattan where there's so many restaurant choices, the Big Mac and the Quarter Pounder and the French fries that's the brand people know. And I think the stock could easily surprise people at 300 to 300 in a good market. And this is not one I chase, but this goes back. It continues to go up, and everybody's kind of worried about the PE. And I'm like, I don't think the PE matters when no one understands that they are the huge beneficiary from their distribution. So that's, and even Nike, even though the China tariffs going on, like, how is Nike breaking out? This stock should be much weaker. So we'll see when earnings come out, but I mean, it's held in there really well. So there's just a lot of strength. Go back to the top names, and we're not going to scroll down to the bottom because this is a paid product, but a lot of names. Last week there was a lot of names that no one had ever heard of, and now we're starting to see some big names return that we've been long, from Lulu, Zendesk, Atlassian, PayPal, which I'm long, Mercado Libre, Mongo. So there's some new names at the bottom here. What's this Rapid7, Ivan, and then Avalara?
We talked about Avalara last week, if you remember. It's a company, accounting software company. It broke out last week. And another software name also looking. The dips here continue to get
go back to a weekly on this one. These things have all run so much.
Yeah.
What a market. So it came public in 15 at 20. Yeah. I mean, it's tough to buy these up as a triple from these bases from 2017, where the perfect buy points for a lot of these software companies. 2017 looks like the year. So again, we're on borrowed time. These things are trading at incredible PEs. I continue to like emerging in Latin America. Obviously, PAGS is one that we've talked about here, Ivan.
Yeah, incredible strength in Brazil last week, especially on Friday.
I just don't like the ETF because it has too much conglomeration. But if we look at Mercado Libre and PAGS, those are the ones.
We saw so many Brazilian stocks on Friday breaking out, and it wasn't just the tech.
Oh, it was? Okay, so but let's go to PAGS. That's one. Goliath is that's a bank, or that's their airline.
Airline.
Wow. Okay, that's bullish. Here's PAGS. Yeah, these stocks could all double. So I that's my favorite sector. Is emerging markets right now. I think Russia's up 40% this year.
Oh, crude oil is up probably 40% since the bottom. And that's the main reason.
Yeah, maybe. Yeah, commodities, because if we look at gold as well.
Yeah.
Okay, got it. All right, everybody. There's plenty to choose from. Hopefully you got a few ideas from us. Ivan, tell people about Market Wisdom.
Market Wisdom,
You're seeing our list here. We're not going down. There's about 50 names a week. We curate. I haven't walked through what the product is.
Well, we offer several different products under the price of one. We have the Momentum 50 list featuring 50 of the current market leaders that are setting up. Some people use them as swing trading ideas, as intraday ideas. Other people just buy them and hold them longer term for multiple weeks. So my 250 list is mostly a self-serving basis. And then if you don't want to do that, we also offer Howard's long-term portfolio, where he picks one new growth idea a month, and he also analyzes his 8 to 80 stocks on a kind of weekly basis, I think now.
Yeah.
And also on a daily basis, you get my view of the current market, education on risk management, swing trading ideas with entries and exits, and that's about it. We try to cover a very wide spectrum, and there is something for everyone. So.
All right, everybody, and that's how much a year, Ivan?
It's 99 a month, 948 a year.
I think what people get most is kind of just access to you, at will, kind of mentorship. I'm chipping in as well whenever I can on email, and we set up a room on StockTwits. So I think mentorship's key here for people that really just want more than just ideas, but kind of want to chat offline, talk about ideas. That's kind of what the service gives. We've got, a lot, in the hundreds of customers that Ivan has worked with for years, and we're here for you. So have a great week, everybody. Ivan, have a good week.
You too, Howard.